All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. Starting off the S&P 500, you can see we started off pretty choppy earlier in the week. Wednesday, nice little gap up. And then Thursday, Friday, the story completely changed. The big headlines, obviously, for one, on Thursday, James Bullard came out and said that he'd support a, quote unquote, a super rate hike of 100 basis points by July. So market reacted very negatively to that. It did gap down on the CPI print, that hot CPI number, and it rallied all the way back to the flat line. And then as soon as Bullard came out with those comments, the market just sold right off. And on Friday, we had kind of a flattish to negative open. We can actually, I'll show you on the intraday here. It wasn't really, you had a flattish to negative-ish open here. And then in the afternoon, we got that report from PBS basically saying that, Putin's going to invade Ukraine, and it's basically a done deal. So that freaked the market out. The market was already kind of on edge, and so it just was kind of like a kick in the gut when it was already kind of bent over, and the market wasn't able to shake that off. And we said that we've been talking about this lately. I've been warning with rates going up and stuff like this. When they do, it's going to be a different market than it was last year. Last year we would get bad news, and the market would just shrug it off, have a little 3% pullback, and then it would just rally back up. A little 3% pullback, then rally up. This is a much different market now, and it's going to be a turbulent market this year. That said, it is a little suspicious to me that they just released that news at 1:30 in the afternoon on a Friday. It's almost as if they were intentionally trying to, put a bunch of bearish, paint a bearish tape going into the weekend right before OPEX week. So, OPEX week is next week. There's going to be lots of games being played, and this is just one example, and I expect that to continue. Now, we also have a Fed meeting Monday morning at 11:30. That is an emergency meeting to discuss a potential emergency rate hike. So there's all sorts of geopolitical tensions and all sorts of, rumors and everything going on, and it's going to be a turbulent market this year. Again, that said, some of this does seem a little suspect to me. Now, we do probably come down and test maybe 435, 434 here on the SPY. We did hold 440 by Friday, but I still think that there is a chance of some upside next week if there is maybe a little bit of downside first. But, this market is very news-driven right now, and it's very on edge, so it's going to be very sensitive to the news and rumors. Either way, geopolitical tensions and inflationary pressures are causing many stocks, energy specifically, as you see the XLE here continues to push higher. Another 52-week high here for the XLE. The XOP also hit a 52-week high earlier. I think it was actually last week, but finished right at the highs this week. OIH also with a strong finish. That very close to 52-week highs as well. And crude, you can see here, if we can pull that up. There we go. It's crude here. Another 52-week high, getting through $94. So here's the actual high print was 94.66. And you can see we're hitting highs that we haven't seen in many years here, really going back to 2014. And this probably gets up to 100. I think I said that last week. At this point, it's so close to the level. It is overbought, yes. You do have this broadening trend line here, but I have no sell signal on crude right now, and it's so sensitive and so to geopolitical pressures. And when you get this close to a major round number like 100, a lot of the time the market just has to go up there and tag it. But energy has just been very powerful, very strong lately. And yeah, it's a tough trade right now, and it's going to continue to be that way with those geopolitical tensions. Nat gas, on the other hand, did continue to sell off a little bit. So we talked about this trend line last week. Nice reversal off of that. It did hold that $4 handle by Friday's close, but ultimately this has been knocked back down. Again, maybe a government or something trying to keep it down on purpose. That would not surprise me in the least bit, but needless to say, a very, very volatile market is nat gas right now. Also, it's very sensitive to this, the inflationary pressures, like these agricultural stocks. Look at the MOO here. Just, another 52-week high here. Actually, I believe this is a all-time high here yeah, it is. So, agriculture stocks are just, basically anything to do with energy or food is really just extremely sensitive right now to what's going on. And that's what's putting the onus on the Fed. And, we talked about rates here. I said, if we look at the 10-year here, I said the rates were going to get up to 2 to 2.1%. We got up there, and then now we got our little bit of reversal on Friday. Some of that has to do with a double-edged sword of bonds being, yes, bond yields going up due to inflation can be, a risk-off signal, but also bonds are risk-off in the sense that, when there's uncertainty and so on, they can also get a bid here. So getting a bit of a relief rally here on the bond market. There's the 10-year. Did manage to close below 2% on the week. 30-year managed to close below 2.3, but it did get up there almost to 2.4 here. And so obviously rates are the big story right now, as well as obviously the tensions in Russia. Also keep an eye on high yield. So if we look at the HYG here, this has got to really hold that 82.50, 82 area. So you got some support right in here. This is kind of where you chopped around for a little bit in 2020, and then you put in this little base. So it's got to really hold that 82 handle, and then you have a little bit of support here at this pivot low around 80. But high yield debt is, a major risk off indicator, and it has just been crashing lately, especially European bonds as well. But these junk bonds are really not standing a chance in this high rate environment. And that's why we're seeing these growth stocks. And that's why I've been saying for, quite some time, don't be involved heavily in tech stocks. And if you are, make sure it is a solid company, with earnings and, doesn't trade at a ridiculously high PE, because in this environment, these stocks are just not going to perform well. Anyways, let's move on here. Let's talk about fins really quick. So financials, XLF did get up here, fill this gap. They have been strong with the higher yield. You can see the broker dealers here also strong, setting in a new 52-week high on Thursday, actually. Morgan Stanley was a big reason for that, as that hit another all-time high on Thursday. But you're seeing financials are holding up with the higher yield. However, the 2-year yield is starting to gain on the 10-year. And if that continues and we get anything close to an inverted yield curve, everything is going to come down. Nothing's going to be safe. But for the meantime, energy has held up okay, and it's hanging in there all right. Let's flip over. Let's talk about the dollar index really fast. So dollar index had that sell-off, and I pointed out this the monthly time frame, which is the one I'm looking at here. So nice powerful inside bar here, and you're just consolidating, just backing and filling here on the monthly. The dollar did get a little bit of a bid as a risk-off play Thursday and Friday, which makes sense. Did not get above this red bar high. But if you close above this red bar high in a daily time frame, you can get right back up to that 97 handle. So dollar index is holding on. And again, the more uncertainty we see in the market, the more the dollar is going to perform better. And the dollar can perform better with gold. As you saw on Friday, gold getting above this trend line high. So there's this big wedge pattern here, and gold possibly breaking out of that. Now, there's a couple things I want to point out. So we got above this red bar high here on the weekly time frame, which is a positive. So we've negated this inside bar here. However, on the monthly, we still have yet to negate this one. So we still have an inside bar on the monthly. But if we close the month above 1919 spot 2, gold will go back to all-time highs very fast. And we talked about the possibility of, and we've really been noting the correlation. Look at where gold bottomed in August, and it's made higher lows since then. And if we look at the 10-year, that bottomed in August as well, and that's been making higher lows. Now, it's outperformed gold, but the idea that gold and interest rates are going up together is a huge negative. It's a huge risk-off signal. And this happened in the 70s too. And, gold, everybody's going to say, oh, gold hasn't done anything over the last 2 years or however long. But you have to understand that gold didn't really do anything in the first half of the 70s either. So there was a lot of consolidation, there was a lot of backing and filling, and then it started to go up towards the latter part of the decade, and it went up with rates. So there's not, and it's going up with the dollar right now. So it's not like these correlations can't break down. It's not like they haven't broken down before. So we have to keep an eye on that. But if we close, that's the big level here. So if we get above that red bar high here on any sort of monthly close, so meaning the end of this month, for example, gold will go back to all-time highs very quickly. But as of right now, we do have options X next week. The market did panic a little bit. So, it was kind of a flight to safety on Friday. That was the big story. But we'll give gold the benefit of the doubt for now. Had a nice little pop here. Silver, not as big of a move here. Still struggling with this red bar high. But if you get above that, you can get up to that 24.50 handle. But silver still getting a little bit of a bid with gold as well. Platinum, this one I actually like the best out of all the PMs right now as far as chart pattern. So nice pop and beautiful consolidation here. So that is a good bullish pattern. Probably needs to do a little bit more sideways action, and this can possibly pop up to 11, maybe 1150. Excuse me, 1150. So nice little pop there for platinum, and I like that pattern. Palladium also kind of a similar chart here, although this one got a little bit out of hand. It had a really big run, again, off of the geopolitical tensions. This one's very, very news-driven right now. But nice little pop, pull back into the 20 moving average, little tail candle, and it's hanging in there. Probably, again, needs to do a little bit more backing and filling, but, you know, it can probably get up to 26, 27. I'd have to run some numbers on it, but nice little pop and then pull back. So essentially, you're basically just erased this whole move. So you move down here, a little bit of a bearish flag, boom, down, down, and then you just came up, consolidated, popped, and now you're just kind of like retracing it really 100% of the way. So I'd see probably about 2600 or so would be a good near-term target, but there's going to be a lot of resistance up there. Anyways, though, palladium looking okay. So copper, this has been a weird one all over the map. Could not get above that 451 on a weekly close. I thought it was going to confirm Thursday, so we broke out on Wednesday, and then we got all the way up to 470 here Thursday, and we just couldn't hold the gains. Reversed back lower, little tail candle inside again. So we're back to square one. Resistance is 471. A weekly close above that probably takes you back up to all-time highs. And if we lose 425 on a weekly close, copper goes probably back down to about 375 pretty quickly. But in any case, it's holding up all right there for now, but did kind of reject that breakout a little bit. Let's flip over. Let's talk about uranium really fast. So CCJ did report earnings, and they did hike dividends. So I think it was a 50% dividend hike. So a nice pop for CCJ. And, you know, a dividend hike obviously shows good fundamentals for the sector. You know, they wouldn't be hiking dividends if they didn't feel good about their company. And basically, you know, you did reclaim this, you know, all the moving averages except for the 100. So you had kind of this, you know, you broke down here, then you kind of put in this kind of bearish chop here, and then you reversed that. So that's a good positive there for CCJ. If you look at the URNM, I told you guys it was going to go down to that 60 handle. That's where we went. We started consolidating, and now we popped. So nice little move there for uranium. It held that 60 handle for now. And really the bigger picture here is that for uranium, if we can get the monthly to come up here, there we go. So actually, I'm just going to use the URA because it goes back a little farther. But essentially, you just had a big juice here. You see the CCJ a little bit better. Got a big juice here, and it just got overbought and had to come back in a little bit. Probably needs to still do some backing and filling, but ultimately the long-term structure of this chart is perfectly fine. And, you know, uranium can be a very good investment over the next decade. Anyways, yeah, let's flip over here and then talk about crypto. All right, so let's flip over to Bitcoin here. So Bitcoin did get a bid last week, got a nice little pop there over the weekend, and, you know, got up to that 46, 40, let's see what the high was, 46, oh, just 45,000, so 45.50. But a nice little pop there for Bitcoin. It is going to find some resistance at this trend line. Probably needs to do a little bit of backing and filling. I don't see it getting through 48,000 right now, though. That would be kind of max upside for Bitcoin. At least at the moment, but a nice little move here. It did have a nice relief rally. And that's another reason why I think that, you know, I know that the market was, you know, there's a lot of reasons investors are skittish right now, especially with the equity markets. But the fact that crypto is holding up, you know, remember, crypto is a major risk on asset. The fact that crypto is holding up gives me a little bit of, you know, indication that maybe some of this selling is a little overdone. A lot of it's panic, you know, a lot of it's panicky. You know, I was saying before that, you know, it's just strange that they released this quote unquote report, this news report at 1:30 on a Friday. You know, why didn't they do that on Thursday? Why didn't they do? It just seems very, the timing was very sketchy to me. And we do have OPEX next week, and we're probably going to see a lot of rumors, and we're going to see the market flying around like crazy here, especially with that Fed meeting Monday morning. But anyways, guys, just to wrap up here. So your levels here, short term, you want to see 434 to 435 hold on the spider. Wouldn't surprise me to go test that. I still think that, you know, we have a nice little, I'll just clear this up here. Have a nice little inside bar starting to form here on the SPY. But ultimately, I think this tail candle here is not going to just go right now. Like, we might come down here and test it, But I think it's going to take at least one more hit of that, and then probably a lower high type scenario in order for that to break. This is a very powerful candle, a lot of volume behind it. So if this is going to break, it's going to take more than one or two tries here. So I still think that there's a potential for some type of upside move here. Maybe not necessarily this week, but possibly after OPEX. But we'll see how the market works out here. But we want to see that 434 area hold. And then obviously if you're able to get through 457, 458, then that leaves the door open up for a move up to 465, 470. So those are your short-term levels there on the spiders. Anyways, guys, thanks for watching. Take care. Subscribe to Jason's channel. Come find him on Patreon. Come find me on carnivoretrades.com. And I will talk to you all next week.